So that's the SGX Nifty telling you a minor dip, but could it get a little worse? How much can IT pull down the index today? We have a bunch of experts joining us. Mayuresh, Joshi of Angel Broking joins us first. Our tech gurus are also there. Mayuresh, this is the news that's come in from TCS overnight. They're going to tell investors about what they find from their US clients, that there is a definite loss of momentum in the BFSI segment. Your first thoughts, how much lower can the stock get?
Morning, Lata. I think as the stance has been with the Q1 performance and with Q3, Q4 being traditionally weak, and one probably not understanding the impact of Brexit as well as how discretionary spending will take place. We've already seen some amount of profit warnings coming from Cognizant, from Mindtree, and clearly I think this is pointing to the fact that if the BFSI segment weakens, probably you will have some amount of pressure come on margins. Now let's take into account that 40% is accounted for by BFSI for TCS's revenues compared to 32.8% for Infosys, and again US contributes almost 53.5%, followed by UK and Europe. So clearly I think you're going to see some amount of pain if such profit warnings start coming through from a big company like TCS, and that will have a telling effect in their EBITDA and EBIT margins. And the guidance that they've given specifically on the EBITDA front of 27 and 28% being maintained, I think that can come under pressure if such news actually starts coming through over the next few months. So my own sense is that the underperformance probably for the sector largely will continue for the better part of FY17.
Okay, Sanjeev Hasin is also with us from IIFL. Sanjeev, good morning. Your first thoughts on this near profit warning from TCS, and do you see not just TCS derating a bit, but even the rest of the IT sector?
Yeah, morning, Anuj. Well, the writing was on the wall. First it was Infosys, secondly it was Mindtree, which has come with two consecutive warnings, and I think now TCS has set the cat amongst the pigeons. So, the stock market already knew that these are stocks which are consecutively declining as the index has been rising. And it raises the questions that is the global recovery so strong as we are making it out of the market? I think that will cause a lot of pause. And so we think it's a negative for the entire IT sector. And for those people who have been constantly saying that IT seems the best bellwether to be bought at a time when it is underperforming. So yes, I think it will have a deeper impact on the market, where we've seen brick and mortar companies actually outshine in a big way. But if the recovery is going to be under caution on the BFSI space, then I would have a lot of doubt on and pessimism on the global recovery, which is being much touted in the stock prices.
Sanjeev, morning. How much of an impact do you see on Infosys? Because TCS has cautioned about a slowdown in the North America market, and Infosys has a huge exposure to the North America market as well. The stock has already corrected more than 15% from its highs, but do you expect a further derating even in names like Infosys?
Well, Sonia, Infosys has found a lot of strength around that 1,000 levels and some confidence on the back of Mr. Vishal Sikka, indicating that maybe the worst may be over in a few quarters. But I'll have a lot of pessimism, because these stocks, Sonia, are over-owned by foreign institution and mutual funds. And right now, sectoral allocation will mean trying to get out of these and trying to get into cement or autos, where visibility is much more and where, the technical advantage is there. So I would expect the entire sector to be under pressure, both on the large cap and on the mid cap side.
Okay, Sanjeev, you pointed out that, the health of the US economy, especially of the BFSI sector, is not what the world thought it would be. What is the overall impact on the market of the index that you see today?
Well, in a phase of mind where you see euphoria on anything, any bad or good results are being bought into, just as an example that yesterday you had a 20% upside in a BHEL, which I've not seen in a long time. And a negative impact didn't come in on L&T, where we've seen Saudi Arabia cancel $20 billion worth of orders. So I think, Lata, there will be limelight on this, and I am very, very pessimistic at these levels, because the precipice of being at 9,000 may, fall as a dampener if this continues and we see more news on Brexit being a negative. As we already heard from Mr. Anand Mahindra when the Tech Mahindra results did come in, that there is a lot of caution he's seeing on the Brexit side. So yes, a lot of caution at these levels would be in place.
So just a two-part question, coming back to that point you were making about TCS, is there a risk to the full year margin band of 26 to 28% that TCS has given? And what would your EPS estimates be now for the full year? Would you scale them down?
Well, I think for the first time, TCS can start to trade at maybe 18 times. It's a stock which has traded at 21, 22 times along with and in a barometer of being the largest player. And I think, Sonia, for once, there can be a downside on that because such a big company coming and warning is prudence in what they are doing. But definitely it means the hurt is deeper than we thought.
Okay, Sanjeev, thank you very much for joining us and making this unscheduled stop. Not looking very good at all. This early morning news, well, actually overnight news, but hitting the screens, as it were, this morning and likely to cast a pall of gloom a little beyond the IT space itself. Let's invite our tech gurus and ask them what they have made of both the indices as well as TCS itself. Ashwini Gujral, Mitesh Thakkar and Prakash Gaba have all joined us. Good morning to you, gentlemen. Ashwini, well, this news just hit us a little before 8 in the morning, and that TCS is going to give a further profit warning. It's almost an earnings warning that we have got. Your thoughts on the index itself and on TCS?
Just give me 2 minutes. My friend is in the sales department of Computer Science Corporation. These are competitors to TCS. And this time in the US, I asked him what's wrong with Indian IT.
All right, thanks a lot for that. Actually, Chinese exports also were less bad than expected. It was a 4% decline expected. They did 2.8%. So the Chinese data was good, but it's not having a salutary impact on Asia. Asia is still in the red. On that note, we take a break and come back with the pre-opening rates.
Well, just about 1.5 minutes left for markets to open or to have pre-opening session. The SGX Nifty is down about 11 points. Mayuresh, your thoughts on how would you approach stocks like BHEL, L&T, Siemens, from here on now?
Morning, Anuj. Largely, I think if one looks at how BHEL has posted its numbers, I think one is looking for consistency to come through because one is not really sure with their previous and historical performance whether this performance will get repeated. Second, I think in terms of how the execution has been in the slow-moving orders on their book, that itself creates some amount of doubt. Third, I think a lot of gestation has probably happened in terms of their order wins, specifically 7 gigawatts expected probably to get awarded this fiscal. And fourth, probably in terms of depletion of the retention money as well as their cash positions, the markets are really expecting execution to pick up and be consistent. So in that sense, I think would wait for consistency in numbers to come through. Though I think the numbers were exceptional for this quarter gone by. But for the capital goods industry as a whole, I think I'll still stick around with L&T. My own sense is that any declines onto the counter becomes good opportunities. The stock might struggle in terms of how the international order wins can be going forward. But largely, I think my own sense is that if you have to stick around with the capital goods sector, I think L&T is probably one of the better bets that we probably feel at this point of time.
Okay, well, just a few seconds for the pre-opening rates to come in. Okay, there they are. And that's a big cut of 0.8 on the Nifty, but really we have to watch out for TCS and see if there is a rate on TCS 10% lower. It may not be as bad as that, but let's also pull up Infosys if there is a rate on it, and maybe Tech Mahindra, and that's Infosys not showing a very big cut at this point in time. But don't forget, look at the way in which TCS is continuing to keep that 10%. It may be better than that when it actually opens. HCL Tech is the other stock that we should keep in our mind. I think we don't have a rate as yet. But Nifty is actually pulled back a little. Sensex is in flat terrain. Nifty is about a quarter lower. TCS now has corrected to minus 5.7. So getting a little better. That first bid obviously was just that, a bid. Tata Motors is meanwhile pulling in the other direction with some green on that stock. Maybe we want to pull up ONGC as well and GAIL. Those are two stocks whose numbers were good, better than expected. Rupee is a little weaker. We went all the way to, I think, a dollar costing 66.30 and now 66.44. So that's a little bit of pressure, which should legitimately be there. After all, this is the big dollar earner, this sector. So some impact on the rupee is in order. But then that's currency has also strengthened a lot. GAIL is opened at 4.8% higher. And ICICI Bank continues to show a 2.4% uptick. Let's see if this is how things will pan out when the markets actually open and the trades come in. These are bids, and now they are saying 5.5% down on TCS.
Oh yes, 5.5% down on TCS. Remember, global banks and insurance companies contribute 25 to 40% of revenues to these technology companies, and now they're of course outsourcing lesser work. So the direct damage comes in not just on TCS but on names like Infosys as well. So let's take a look at that. By the way, ONGC is one stock that could be reacting on the upside to its numbers. Very good up move in its margins this time around, 47%. So ONGC in focus as well.
You know what's interesting is that Wipro is actually the biggest loser right now, and Wipro is one stock which has actually underperformed the most and trades at the lowest valuations. And this just tells you that in an environment where the IT is not doing too well, you normally pick out the weakest one and punish it more, and that's what's happening with the Wipro. GAIL, of course, as Sonia mentioned, is up. Aptech, let's pull out that stock. That really is the story of the last couple of weeks or couple of months rather. The way the stock has rallied from 40 all the way up to 175, and Rakesh Jhunjhunwala keeps buying. The big question we are asking is why is Rakesh Jhunjhunwala buying? I mean, is this business fundamental improving? Is it that? Is there something else? But he is buying, the family is buying, and the stock clearly is seeking higher levels. Mayuresh, any thoughts on Aptech and the way that's rallied? 1 month it's doubled, more than doubled.
Anuj, I think I've not noticed anything which has changed fundamentally for the company over the past few quarters. In fact, the margins have dipped, the profitability of the company has dipped. So the operating efficiencies that one really expects for a company to improve, probably that is not coming through in a company like Aptech. So I'm not really sure in terms of the operational parameters. But yes, I think the fact is that the stock is moving up. And clearly, I think one really needs to be cautious at this point of time, because as you rightly said, I think the stock has actually doubled in a month's time.
Okay, let's do one thing. We're talking about the big rally or the big fall in IT stocks. Now, in June I spoke to Shankar Sharma in the show Unplugged. Of course, the whole conversation wasn't unplugged. It was about business as well. And one big call that Shankar had made in June was exactly how it's playing out on IT. Let's just hear that out again.
Two big bulwarks of India have been IT and pharma. And both are facing very severe challenges, extremely severe challenges. And it could be a challenge of the kind that at least IT may not be able to overcome. I mean, cloud, I think, is a serious problem. Okay. Cloud represents a complete new dimension. It's so disruptive to our IT models, that it can completely force them to revisit every single assumption of theirs. And pharma is facing the problems of obviously not having been very kosher in the way they have done business. Pharma may well be able to overcome, but IT is in a spot of...
Okay, that was the big call from Shankar Sharma.
Cloud computing, that's the big issue.
Exactly, played out like that to the dot from that interview, the way IT stocks have underperformed.
Oh yes, definitely. That's the big pocket to look at. By the way, on the upside, you have not only GAIL, which is up 3.5% reacting to its numbers. ONGC is up almost about 1.5%, and banks continue to charge ahead. So Axis Bank, SBI are all your big gainers at this point in time. Manoj Muralidharan of Religare is also sitting by with us. Manoj, on the banking space, you have a strategy on ICICI Bank today. Just take us through that.
Right, Sonia, the view here is if you see last 3 days, even Monday, we had a stellar rally, almost 500 odd points. But if you look into the index, it was not more than a 2.5% buying or a long built up. So ideally, we have seen the buying has come in the breadth of the market, that is on the stock specific and not really on the index. And even yesterday, net, if you see the FI's cash buying versus the stock future sell is almost a 300 crore sell from the market. So we are expecting, even on the banking side, there should be some index management, so-called, and we are expecting the bank and the bank nifty to come down, possible at 350 to 400 points. So it's a sell call here. ICICI Bank would be a sell at let's say 280 to 282. The opening price, you would recommend to sell there, a stop loss of 292 to 294, and we're expecting a target of 260 on that.
Okay, can you take us through your bank nifty strategies?
Absolutely, Lata. I guess when we entered into this contract of September, there were some shorts, and the short covering led to a big rally. So it was almost 1,600 odd points of rally that we have seen, let's say, in the last fortnight. Now, ideally, what happens is the bank nifty and the nifty, it has a correlation in terms of points, and we feel 2.24 to 2.26 on the price ratio is a resistance, and we are not really seeing the money coming on the index. It is more towards the stock specific. Like if I am not mistaken, we would see some money coming coming out of the large cap, and we would see some into those specific PSU banks which would have a mid or a small cap capitalization. So as of now, we are seeing that the weightage in the PSU is not more than 26.8%, which can go up to a 32%. So we are expecting that the private sector banks would lead to some correction here. The bank nifty strategy is, if you get levels of 20,600, you short the futures. Stop loss should be 20,850, and we are expecting a target of 20,000. Likewise, you can buy a 15 September, which is the next fortnight, to the 20,000 strike put option. Try and buy it between a 35 to 45 rupees. Keep a stop loss of 10, and we are expecting a target of 80 rupees on that.
Okay, one more stock that you got to keep on your radar is Patel Engineering, because the stock has doubled ever since our interview, Lada. You know, the kind of words that the management spoke, and today it looks like, at least today it won't have circuit opening. In pre-open, refresh it please. You'll see it from 93.75, I think, going to 89. So that's going to be another stock that will be on traders' radar.
Well, actually, we have Dhirendra Tiwari of Antique Stockbroking also joining us to decode the BHEL Q1 numbers and the way in which the stock moved. Morning, Dhirendra. Thank you very much for joining us. Well, that was a huge rally we saw in BHEL. Is it has it adequately discounted the good news from the numbers?
Yes, I mean the performance in 1Q was good. So, you know, from our standpoint, we have a target price of 192. So I'm sure that that indicates that there is a more upside left. But having said that, this kind of move is always surprising, and there may be some up and down around this. But general feeling.
What did you like about the numbers?
See, there is improvement in all aspects. Revenues are better, margins are better, and the profit numbers are better. So it is essentially improvement in all counts, and therefore there is a big sort of surprise. So that is the thing.
The order inflow was a bit of a spot of bother. I mean, it came in at just 3,000 crores versus almost 20,000 crores same time last year. Is that something that would worry you?
No, not really, because you know, orders in BHEL kind of companies can be lumpy. Last year, first quarter, we had one big order of 18,000 crore rupees, and this quarter we didn't have any specifically large orders. So we expect that order flow will remain strong in the following quarters, and there is a good pipeline. And therefore, while 1Q was slightly muted, one can expect meaningful pickup in 2Q, 3Q, and few large ticket items can come in. So I'm sure that the growth in order inflow will be, you know, at least 10-15% on a very high base last year. Last year also was pretty good. So I'm of the view that there could be growth this year also in order intake.
Dhirendra, good morning. What does that mean for the stock? Because yesterday's rally was purely on account of short covering, but this is still an under-owned stock and one of the rank underperformers. Do you see that correcting now?
Yeah, I think you know, the underperformance was primarily because of a few specific reasons. A few projects that the company got in last 1 year could not see progress on work because of delay in environmental clearances. So that was one big reason, and there was you know, execution related delays which led to revenue growth being pretty slow. I think both these things should correct going forward, and if that happens, I think this should be a meaningful outperformer going forward. It's a good quality company with very strong market share of 80% plus. So there is no reason, if macro environment improves, this will not do well.
The power equipment industry or segment as a whole has been doing well. That's something that you've seen in BHEL's numbers this time as well. Power segment revenues are up 30%. Are there any other stocks that you track within this sector that one can still look into now?
The power equipment space overall will see good days ahead. I mean, if you look at the BTG, particularly BHEL is the only stock that we like. Otherwise, if you look at it, you know, transmission distribution space, that is also quite interesting, and therefore one can look at some of these stocks as well. The leading names that you might be aware in transmission distribution space as well, and of course, you know, the names are very obvious there.
Actually, is the market worrying you at these levels, or are you finding reasons to buy and stocks to buy? If yes, what?
See, we came out with an interesting thematic very recently, which is basically a very detailed analysis of operating leverage.
Okay.
Now, the thing is that in India, the operating leverage is one of the biggest themes historically, if you see last 20-25 years of growth. So we think the market is at a level where one can always expect, concern of being fairly valued. But we try to identify companies where the operating leverage is yet to play out. And as growth happens, the earnings growth will be much more than the revenue growth. So, industrials, autos, cements, stocks, and maybe a few other sectors like logistics, etc. will see some sort of surprise going forward.
All right, Dhirendra, thank you for your time, and thank you for your thoughts on BHEL. That's the word coming in from Antique. They've been positive on BHEL. They have a buy, and now they have a target price of 192 on the stock. They see more upsides here on. But let's get some final comments before the market opening. Mayuresh, the broader market has given a lot of opportunities these days. What are your top 1 or 2 ideas in the broader markets?
So, Sonia, I think what you're liking probably from the tire space, because with the fall in rubber prices, you're seeing a lot of traction happening on these stocks. There's a stock called Goodyear India. Now, with the cash position on their books of 334 odd crores, that's almost 25% of their market cap. 50% of the revenues coming from the tractor segment, and the large expectations with good monsoons is that tractor sales are going to see a rebound in volumes. So, correspondingly, I think you're probably going to see some action happening on the volume and the top line front for Goodyear. Our own expectation, 7.5% top line growth, close to that 1,700 crore odd mark by 518. You're probably looking at an EPS of 53 and profitability of around 121 odd crores. Again, in a valuation perspective, trades around 11.2 times, which we feel is quite reasonable. The other stock probably that we're liking at this juncture is TV Today. And again, I think if you look at the performance of their Hindi channel, market leadership of Aaj Tak, you're probably looking at India Today doing well at the number 2 position. You're looking at the radio business actually getting sold off. So 4 channels have been sold, 3 in the process of getting sold. And there itself, again, the top line and bottom line growth anywhere around 16%. And again, I think in terms of valuations, quite attractively priced. So I think TV Today is something that I'll be optimistic about as well.
Okay,
right.
Just about 1 minute left for markets to open. Ashwini, your top conviction call this morning?
The Tech Mahindra is a sell with a stop of 476, target of 450. So that is something where you should see traction.
Okay. As we get to the last few seconds of the market opening, it's TCS down 3.3. Manoj, can you squeeze in any more strategies? Well, we have 40 seconds.
Well, Lata, I guess it would be a nifty call. I would short a nifty futures close to 89.60 to 89.80. If I get that, a stop loss of 9030, and we are expecting a target of 88.60. So, this would be a positional call for at least a 2 to 3 days. We are expecting at least 120 points of index management that we should see from the nifty, and possible of 400 points from the bank nifty on the downside.
All right. Thanks a lot for that nifty strategy. The markets looks like at the index level will open flat, but the mid caps are showing a lot of spunk in spite of the bit of bad news that we have got from the IT space. TCS itself looks like will open 3.3% lower. Well, there goes the bell, and it's 4% lower now, 4.06, 4.08 lower, 4 1/4 lower. 2.4 has been long given up, so 2.325 is where the stock is. 2.320 now heading towards 2.300 with some hurry. So it's lost 140 rupees this morning, 136, 139 as I speak, 142. So that's the loss on TCS. That's a significant market cap that's been lost. It's now down about 6%, 5.8% down. HCL Tech is a close second with 3.3% knocked off. Yes Bank is taking it on the chin. 1371 was the minimum price that they were willing to sell their share, and the share is hurtling towards that number at 1374. But the bigger losses, the top 4 losers are the IT stocks. TCS down 6% now. HCL Tech down almost 3%, 2.8. Tech Mahindra down 2.5%. And Infosys down about 2%. BHEL is also seeing rapid profit taking, now down about 3%. But of the top 5 losers, the top 4 are IT stocks, and the 6th one is Yes Bank, which is losing. Okay, Wipro also lost about 1%. Not the biggest loser, but then it hadn't gained much either. NTPC, Axis Bank, Maruti are all minor losers. As a whole, the index has not lost much, and that's largely because of ONGC gaining about 2% at this juncture. Bharti Infratel, the one aspect of Bharti which is actually pulling it up now, 1.3%. Bajaj, GAIL, I forgot, 1.4%. So GAIL and ONGC are the ones that are doing well. Bajaj Auto is pulled up 1.4%. HDFC is pulling in its weight 1%. Tata Motors, DVR still not giving up about 1%. So at an index level, it's all balanced out with just a 0.1% downtick.
Just one word before Sonia talks about the mid cap. Just keep an eye on Bajaj Finance. It's the ex-date for stock split today, so that stock is down 5%.
Okay, so Bajaj Finance is something that we're going to be keeping an eye out on. In the broader markets, though, the mid cap index is flat. The stock to really look at is Aptech, 10% higher on Aptech now. It's risen 160% in this year itself. A lot of momentum coming in over there. So Aptech is now at 174 rupees. Apart from that, Wellspun India has also been making a bit of an attempt to bounce back. So Wellspun India up almost about 3% or so. Motherson Sumi has made an acquisition, a very, very small acquisition, but strategic fit over there. And that stock was up 4% yesterday as well. Talks of a QIP. So Motherson Sumi still continues to be in focus. Ashok Leyland, on the back of the news flow with Nissan, Ashok Leyland is seeing a slight bit of a downtick, but as I said, it's neutral for the stock because it's already taken the write-downs for those investments. So Ashok Leyland also in focus this morning. Everest Kanto is one stock that's gone up almost about 10% this morning, and you have a couple of these names like SAIL, Suzlon, ITNL that are also in the green. On the downside, Patel Engineering is coming for profit taking, down almost about 4% this morning. Jain Irrigation is seeing a bit of profit taking as well, down almost about 1.5 to 2%. But otherwise, the market opening is flat with a downward bias, which is a good thing considering that there's a big drag coming in from the IT space. It's not bad to see the Nifty and the Sensex actually holding up in flat terrain around that 8,900 mark. The big boost really support is coming in from HDFC, Reliance, ITC and HDFC Bank. So the HDFC twins are really the pillar of the market these days.
I think today is also another day of test for markets strength. This is a market which is climbing wall of worries. So you have one leg not doing well today and still does the market do well. The sense you get is that this market, of course, now has a bit of an upper boundary defined somewhere around the 9,000 mark, 8970, just for the near term, because a lot of weak bulls have got in. What the strong bears have done also this market is that they have let the weak bulls enter in the last phase, and they just
move in for the kill. Maybe
take a step back, let the market correct 50-100 points, let the weak bulls get out, and then the market again participates on the upside. So the strategy still remains. These minor consolidation dips are buying opportunities. In fact, on that note, let me take this to Ashwini as well. Ashwini, since a lot of your trades have worked out in the first hour of trade, will you buy this minor downtick that we are seeing?
See, today the buying zone for at least the Bank Nifty is closer to Bank Nifty futures 20,420 thereabouts. So you need some sort of a retest and a stopping of this fall. Early morning, I believe we'll get up to 89.30 thereabouts on the Nifty future. Maybe consolidate there. Then maybe latter half you could have a rally and which could take the market to the highs of the day, which is a bit surprising given the open. But that's the way I think it will play out. I don't think this market will just collapse, in a single day. Chances are we'll consolidate at lower regions and then probably start a rally once IT is done with its fall.
I just wanted to point out a couple of mid-cap stocks that we've been chasing. Aptech, that stock is up about 10% now. Like we just told you a little while ago, Rekha and Rakesh Jhunjhunwala have bought further shares in that stock, and this is I think the third or fourth tranche of them buying these stocks. So Aptech is now up 10% on promoter buying. As well, Federal Mughal Goeds, if you want, you could take put your eye on that stock. That's again up 4%. It's just that their US company is going to delist because of very good offers by ICANN, but there's no need why the Indian unit has to delist. In any case, it has been, this is a stock which Nigel pointed out in his mid-cap mania about a month ago, and that stock has gained a great deal. Also wanted to point out that Patel Engineering is now down 7%, so clear profit taking has come in. There's some good money that's coming into the company's P&L, and therefore it rose, but at the moment it's a profit taking mood over there.
Indication indication was there in the pre-open when the circuit opened from 10%.
Exactly.
It came down. So the indication was there. Just keep an eye on some more stocks, by the way. Page Industries is down about 1.5%. Keep an eye on some of the mid-cap IT stocks as well. Hexaware, NIIT Tech, Mindtree, all these stocks are down. Ashwini's call was Tech Mahindra. That stock is also down about 2%. And of course, Bajaj Finance has actually seen that dip being bought. That 5% dip has been bought beautifully. It's now down only 1%. And that's the beauty of this stock. Every lower level, it just keeps getting bought.
Oh, absolutely.
All right, well, the stock of the day clearly is TCS. It's now down about 5.5%, and it's just about less than 10% away from its 52-week lows. Remember, the 52-week low for TCS is 2115, and now the stock is at 2300, just thereabouts. So we have two gentlemen joining in now. Dipan Mehta joins in, and in a bit we will get the head of NASSCOM as well. Dipan, hi, morning. We've been discussing what investors should do with stocks in the IT space now. You reckon one should completely stay away?
Yeah, absolutely. And we've been advocating this view for a long time. And I've been bearish on large cap IT for the past at least 12 to 18 months or so. But